Bitcoin has seen a little bit of turbulence over the last 24 hours. In this video, we're going to be jumping down into that most recent price action and reviewing what has been going on with BTC. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? By subscribing, you'll be kept up to date with all the video content that we do here at Cheeky Crypto. And if you haven't joined us in Discord, then what are you waiting for? It's the place to be. Go check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's just jump right down into the video. So BTC paired up with USDT on the BitGet spot exchange and the 1 hour time frame. We were expecting a move to the downside yesterday, but we were not expecting this much of a move to the downside. So following on from yesterday's video, we're talking about a move to 29,539 to the 29,615. That is this yellow box area here under a 5-wave pattern. And it looks like this has overextended quite a bit. And we can see that there is still 5-wave pattern in here. It just looks like we maybe are actually in a little bit deeper of a move. So let's go ahead and do some sense checks on this little structure here, just so we can see where we sit. So I'm still expecting a 5-wave pattern. And I think for the most part, we do have this. Yeah, right inside here. So it's an it's not really an overextension. It's a third wave movement that contains a very, very clear 5-wave structure. Okay, and then we have this one here, and we'll go ahead and sense check this being another wave 1 over to this, which will then take us into that 1.618 for a wave 3, which is the one that we've just drawn up here. So that would go and put us at the wave 1, 2, all of this is a wave 3, coming up for 4, and we've got to come down into the 5th. Okay, that's how it looks at the moment. The alternative route is that we are have had an overextension within a 5th wave movement, which is also a possibility. But for now, this is what it's looking like, and it's looking interesting. Now, we have to also consider that I was looking at that as an A wave coming down here. This is a B wave movement to the upside, and this was supposed to be our C wave. However, we now need to sense check this to see whether or not we've gone impulsive on a larger scale. So we're going to go do that. Here we can see we have achieved a higher impulsion. Okay, so now it looks to me like we have a wave 1, a wave 2, coming down here in for a wave 3, up for a wave 4, and then down into a 5th wave movement. Okay, that essentially means that we are looking very bearish here for BTC at this time frame. Okay, so what was going to be a zigzag pattern has gone down far too deep. So let's go ahead and reflect on what is going on with this 4th wave movement over here at the moment. Right, we bounced up, and actually it looks interesting. We're overbought on our 1 hour time frame, so we might see a bit of a move to the downside here, just to finish off this little structure before we bounce, and that's kind of what we're looking for. Now, looking at the structure of this, it can come down quite aggressively. It looks like we should be experiencing 5-wave movements. So let's go ahead to the 5-minute time frame here, and what we're looking for is we're looking to see about this initial drop. And actually looking at it, we have a interesting structure here. We move down. Okay, there's a sub count in here, possibly. It's actually a little bit difficult to get a good read on that on the 5-minute time frame. We'll just take it down into the 1 minute just to see how things are looking. And as you can kind of see, we have an impulsion here. Here, we then come up, but we create an overlap. So it's not looking to me like we are impulsive, at least not on our 1 hour time frame, meaning this is probably not the start of that next move. Taking a look at this structure, the one that's actually interesting to me, this basically looks like we might have to move up before we move down. Over here we can see a move down, we bounce up, we've moved down 1, 2, 3, 4, 5, and then so yeah, I'm gonna call it here. I think that is the structure, so let's go ahead and just sense check that. Let's see if that meets our requirements, and it doesn't really until we get to here. So in which case, we're going to have to look at this as an extension in itself to about here. And then we bounce up, and then we go down into a final 5th wave movement. So it does look like it's there. So let's come back up into our 1 hour time frame. Bring this in. Okay, so it looks like this here is a wave 1, but it doesn't look like we're finished with this little move upwards yet. We probably can still push a little bit higher here before we come on down. It looks like we probably have finished the top of the 4th wave, which is kind of where my mind was trying to ascertain, oh, is this move done? It looks like it could be, but it's really difficult on those smaller time frames to be very accurate about it. So we'll assume that it is for now, based on the fact that we do have a 5-wave structured move to the downside there, but it could just be a flat correction. So, it's one of those. We'll see. Ultimately, if we have topped out, this is going to show us with a potential low of 28,664 to 28,742. Okay, now invalidation, or an area that we cannot cross if we want to continue this move to the downside, would be up here at the 29,665. So again, that's that kind of area. Let me put that. Actually, no, I will take that one off. We don't need this one. So we're going to remove a couple of these lines as well. There we go. And I might as well remove that. Okay, so that's kind of what we're looking for. And then obviously, if we go up higher than 29,665, then we will in fact be invalidating this idea of a 5-wave structured move to the downside as I have it drawn. There's other ways of drawing it. This is the one that I just think is the most probable. Essentially here, it's possible that we finished our 5th wave movement over here and we can bounce up, but for the most part, that's not what I would expect. I would expect us to come down before we go up. We are below the 50 EMA, we're below the 200 EMA, we're also below equilibrium. So a bounce upwards is kind of expected once we finish this structure to move to the downside a little further. And we'll be looking to target out the equilibrium. 29,600, upwards a little bit higher towards the 29,679. Now, that could just be a wick. Whether we close above the 50 EMA is going to be interesting. The 200 EMA sits quite high here at 29,841. So I'm not expecting us to kind of rally up and push above that right now. With the FMOC just around the corner, it'll be interesting to kind of see what kind of impact that's going to have. We are gearing up for a bit of a move to the upside. So looking at the structure here, although we're in a 5-wave pattern, we will bounce up before moving down. My expectations are that we move down, we finish this little move off today, then we rally up tomorrow morning up towards equilibrium, and then the FMOC will come in and smack us right the way back down into a final 5th wave movement, where then we'll bounce on up. So that's kind of my series of events. It could be interesting to kind of see how it plays on out. Now guys, if you haven't already checked it out, membership.𝗕𝗘𝗪crypto.io is in the website. This is our memberships website where we have everything from members only video content, the course material, understanding Elliott Wave theory, smart money concepts, risk management, portfolio building, all of the written articles and reviews and airdrops, all that kind of stuff, along with data, events, coaching, if that's of interest to you guys as well, can be found here. Now, we're offering 7 days free trial on any of our plans. So why not head on over to membership.𝗕𝗘𝗪crypto.io and check out what we have to offer. And you can enjoy all those benefits for free for 7 days. Just make sure you cancel it before payment is taken. But why not check it out if you're looking for getting a little bit more extra or getting a little bit more extra from the crypto space. Membership.𝗕𝗘𝗪crypto.io, link is in the description below. Let's jump back down into our charts. This time, let's go ahead and reflect on our bigger weekly time frame. Okay, so we obviously know that the micro movements on the hourly chart are looking to be a little bit more on the bearish side right now, and we're going to be experiencing a fair amount of volatility, right? I think it's to be expected. The weekly time frame can give us all sorts of hope from time to time, right? We can see that there are similarities in places where people seem to think that maybe we're in a bullish market, you know, we're done with the bottom, and there isn't really a good justification for this other than it looks like, you know, it should because of the amount of time that it's happened, or it looks like we're out of the gate because we broke a trend line. So for example, there's a lot of weak analysis out there that you find that they will basically say, look, we broke above a trend line, so therefore we're in a bullish market. And it's not really as simple as that. If it was as simple as that, we'd all be millionaires, right? You can't just draw a straight line on a chart and think, you know, that's it, that you have to worry about anything. But for the most part, a lot of people think that this is the bottom down here. They think that that's in and they don't have to worry about anything. It's like, we've hit a couple of lows and this one here, and we've rallied up quite a bit now. So yeah, the bottom's definitely in, right? There isn't really any good sound analytical thought pattern to it, just that people feel that that is the bottom. And I want to kind of counter that to a degree, right? The weekly chart here is not as strong as people want it to be. And that's not to say that it's not necessarily strong. It's just that it's not really where it needs to be. It needs to be in a much better position if we want to be thinking that the market here is going to be taking off, right? And we're in a bullish market. Now, unfortunately, we're back to overbought on the weekly time frame, on the monthly time frame, and we're almost overbought on the weekly time frame. Now, the daily shows growth required, or momentum, I should say, to the upside required. And I still target out that $34,000 to $35,000. However, I'm not as bullish on this weekly time frame as many others may be. And for me, I think that ultimately we are looking for a break to the downside. And whether we break that 15,476 is yet to be seen. Right, we don't know if it's going to do that, but I suspect it probably will. Now, as you can kind of see, we've got these curved lines on this chart. And, well, they would show us moving down towards the $10,000 level, okay, if we were to test these. If we've tested the highs 3 times and we haven't really tested the lows, in fact, this bear market would put us right slap bang in the middle. Now, if you take a look at the 2018 low, you can see that it didn't touch this trend line down here, or this curved line down here. Instead, it rallied up and then it tested it at a later date. This is interesting, but we have to also consider that based on its curvature, that actually we're not likely to see a similar scenario. We're not testing up here. Now, I could, of course, go ahead and draw this here and be like, look, we're fantastic. We're going to the moon. But that wouldn't be very fair. It wouldn't be very just. That would be me trying to make something fit a narrative because we wanted the market to be bullish, right? And for the most part, it looks like there may be a requirement for a test of the downside. And I know what people are going to say, no, that's not going to happen. You don't know what you're talking about. Go get a real job. Whatever the comments in the YouTube are down below, you guys can fill your boots. Essentially, that's not really how things work, right? We can't just draw a trend line and think that that's how the market's going to move. There's a lot of psychology that actually goes into the back of these things, and we need to kind of consider many of the other variables. And I've been through this many times. So let's just take a Fibonacci retracement tool. This is not the best chart to do it on, but I will draw it on here nonetheless. If I go ahead and pull this on here, where we had that initial move down, we moved it to the bounce, you can see that we stayed above the 1.236. In the 2015 bear market, we bounced on the 1.236. Therefore, the 2 previous bear market lows were pretty predictable because they were between 1 and 1.236 on the fib scale. However, in this particular bear market so far, we've actually come down deeper than the 1.382. And you can see here that we have an initial pull to the downside. We bounced. We then went down to the 1.382, lower than. We bounced, and then we came down even deeper. This is more of an indication of a W, X, Y, X, and Z. But the internal workings are not great. But nonetheless, I think that's probably the best way of looking at it. Now, if this is a W, X, Y, X, and Z, then there's a strong possibility that the bottom is in at 15,476. However, it's also possible that this is a W wave coming down here. This move up here is a Y wave, and then we've got to come down and have a finishing Y wave. And that Y wave can be a couple of things as well. Could be a WXYXZ in itself. And so we have to kind of consider that these are options that are currently out there, whereas it is still possible that 15,476 has bottomed out and it's just a WXYXZ structure. And that is perfectly fine. That's not a problem. However, based on the psychology of people buying and selling, I would suggest that actually considering most of the large investors, institutional players and billionaires were selling down here, and in fact were selling into this move to the upside, I suspect that a test of this low trend line or curvature line is likely to occur simply because they haven't bought in here, and the people that are holding the positions at the moment and holding Bitcoin's position are retail investors majority. I suspect that they will unfortunately not win this trade and will ultimately see selling pressure and break on down. Now, what catalyst is going to do that? I don't know. I have no idea what kind of fundamental breakdown is going to create such a drop in Bitcoin's price. However, there are many things in the real world that could do it. Everything from a Fed pivot, where we see historically crashes in the market for the stock market, could also be a catalyst for sell-off pressure in the crypto space. We could also see the housing crisis really start to come into formation and really tank the markets as well. There's many different crises, just pick one. There's dozens of them around the world. They're not really black swan events. We can see that the banking sector is also still in trouble. We've got problems there as well with bonds and all these kind of things. They haven't gone away. Nothing's magically disappeared. These banks that didn't have risk managers probably still don't have risk managers and probably are still over leveraged in lots of positions. I suspect more banks will fail. Okay, and that gain could cause more of a catalyst to the downside. One of the things I just want to highlight here though, guys, is that although we want the bottom of the bear market to be in, we've seen just a few weeks ago that many of these altcoins showed us that the bear market lows are not in. Now, many altcoins will bottom after that of BTC. So, it's important to reflect on that as well, that Bitcoin may have a bottom here at 15,476. That's okay. I suspect it probably hasn't, but that's okay if it has. But a correction nonetheless is due. As I've said many times before, I expect 35,000, possibly even pushing it into the resistance of 38k before tumbling down towards 20k, filling both the CME gaps at 35k and 21k. Let me know what your thoughts are on all of those ideas down in the comments below. Do you align to my thinking here? Do you think that the market is incredibly fragile? Let me know what your thoughts are in the comments below. If you found this useful and informative, smash the like button. I do appreciate that. If you are new, subscribe. And guys, why not check out membership.𝗕𝗘𝗪𝗏𝗀𝗏𝗏𝗏. Sign up with a 7-day free trial and just try it before you buy it. Let me know what you think of all the things that we have to offer there within the Discord server and on the website. Guys, until the next one, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.